I'm back with wealth strategist and tax attorney Rebecca Walser. We're talking about the, disturbing state of not just the U.S., but in some ways the world economy. Rebecca, I like to sort of summarize things so that people have a grasp of what you said and what it means. I think you are making 2 points. And the first one is massively promiscuous increases in the money supply caused largely by the Fed. I assume that part of the purpose of doing this is to also grease the ability of the government to have control over all this money. So that by itself has an inflationary effect. And all of this occurred, as you said, in a very short space of time. And then you made a second point, which was a little different, and that is that the United States has been sort of the world's reserve currency now for at least 50 years. And things are by and large denominated in dollars. And that has all kinds of economic benefits for a country that gets to sort of play that role. And you're saying that as a kind of self-inflicted wound, in other words, it wasn't that other people ganged up on us and created a new currency. We booted Russia, a massive energy supplier, out of our trading system. So naturally, the Russians went with the Chinese. They went with an alternative system. And you're saying that could, or maybe already has, spelled the end of the dollar as, you could call it, the world's reserve currency. Now, does that mean that we are in for harder economic times in this country? And what does that mean to the ordinary person who says something like, well, how does that affect me?
Yeah, I mean, it's the end of an era. You know, Dinesh, we've been the reserve currency since the 40s, Bretton Woods, but we were backed by gold until the 70s. So countries could always exchange dollars for gold in the United States, and that's really what preserved us. We were a hard asset-backed currency. When we came off the gold standard in 71, we had massive inflation. That's the time frame that you remember with that massive inflation, Volcker days, all those things. And that's when Kissinger basically went and made the dollar have an quasi-asset back. That's what we call the petrodollar. So we've been enjoying, exactly as you said, this system for 50 years, and it's over. It's ended. And the only reason you haven't seen it yet, Dinesh, the only reason the dollar has not yet collapsed, and the best analogy I can give you, and I heard this, I stole this from somebody, he said, it's like realizing you have to leave for a trip, and you're going into the laundry room, and you're like, oh, I forgot to put the clothes in the dryer. I have to take the dirty clothes. Which one is the best of the worst of the dirty clothes? And so the world doesn't have a shining beacon currency to say, oh, it's not the dollar, it's the yuan. They're just not going to it doesn't have the breadth, it doesn't have the depth. We don't have an immediate alternative to the dollar as Russia and China are unveiling their reserve. So people don't know where to put money. And so the net asset flow globally in the United States is still positive to the dollar, which is making the dollar strong. In other words, because of its position that it's had for over 50 years as the world reserve stable currency, people are assuming that it will continue to be. But it will get to the markets, and they will understand that the dollar is no longer backing up the oil sales. It will no longer be bought like it has been bought every year because these countries don't need it any longer. And that's where you will see the collapse of the dollar. And that is a huge problem for all of us, Dinesh, because it basically means we're moving to a new currency system and the dollar will not be reigning supreme.
Rebecca, just to probe this a little bit more, what you're saying is that the primary oil producers are no longer beholden to the dollar system, right? That they're now trading among each other in other currencies. And they're also saying to the United States and the Europeans, don't think that you can pay us with dollars anymore. You better pay us in rubles or you better pay us in gold. And this now means that the dollar is no longer the universal currency that it has been. And that's bad news, you're saying, for the dollar. The public announcement may not have gone out. We're in an illusion that the dollar is still holding. But I assume part of what you're saying is that you can expect the dollar to lose value dramatically over the in the forthcoming period.
Yeah, I wish I wasn't saying this, but honestly, Dinesh, this is why Jerome Powell came out from Jackson Hole on Friday, the end of August here, and basically said, Do not expect stimulus. Do not expect interest rate cuts. Do not expect accommodation. In fact, we have to aggressively, and for as long as it takes, tackle inflation. And what that means in the analysis of the end of the day, we're at about a 1.5 to a 1.75 Fed funds rate right now. We need to get to about a 4%. That means we still have a lot more pain. And just to put one last little economic piece so you can understand the scope and the depth of what I'm talking about, Dinesh, we had since 2008 basically a Fed funds rate of 0 to 25 basis points. For 14 years, all of the international bonds that have been issued have been based off of a dollar that low. When you come around and in the scope of 1 year, start raising your rate so fast that you're going to go from a 25 basis points to, let's say if they're trying to get to 4. Now, obviously, they're not going to get that done by the end of this year, but it is going to be so painful for all of the financial system bonds that have existed and been put into place for the last 14 years. And let's be honest, everyone talks about the stock market and equities, but bonds run the international institutions of the world. And this is what the problem is. So as this dollar collapses, and Jerome Powell's doing everything he can to keep it strong by continuing to let everyone know we have to raise rates. But as the world realizes that the dollar is no longer the sole hegemony reserve currency, then we are in for pain. And the equity markets don't like interest rates raising, but they don't like a deflated, non-strong dollar even more.
Let's take a pause. When we come back, I want to ask Rebecca Walser what you and I can do to protect ourselves against a troubling future.